Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back, traders. Today is Sunday, the 31st of August, 2025. Time is about 11:28 a.m. New York time. And as usual, is the time of the week that I like to look at the charts and look for trading opportunities as well as investment opportunities. So in this session, I'm going to cover just the equities, the major indices, SPX500. We'll also look at the NAS100, and we'll also look at gold and see how these charts are going to help us plan our trades coming into the new month of September. So without much ado, let's look at XPX, and I'm starting out on the monthly time frame. So as you can see, XPX on this monthly time frame is in a strong uptrend. We closed the month of August in green, despite all the volatility and the scary news that popped up. The month still closed up in green. When we looked up also at our indicators, volume is not in a healthy place. It's kind of declining. As yeah, it's just been declining, but market is still going up. All right. Our RSI is still up right above the 80 level now. Um, Our stochastic cycle on the monthly hasn't turned down. It's in the cruising area of 96. And our MACD is also well above the zero line in the positive territories. So there's really nothing on the monthly that suggests that the rally is over. So let's keep that in mind. The trend is up. The indicators are all pointing up on the monthly. The one thing I like to caution on the monthly is there is a divergence in development. But again, until we get a full month where a candle displays weakness, we cannot confirm this divergence between this high and the all-time high that we have now with a lower RSI. We have to give at least one more month to conclude on that assessment. So let's step down to the weekly, see what is at least before us on the weekly. And on the weekly, we have some good clues. All right. So last week, when we analyzed the chart, I did spot that this hangman candlestick that we printed was a concern for me, and that patience was of virtue, not to enter long positions. Um, you did get a little bit move up to the liquidity zone, which is right above the hanging man. But the good news is we haven't closed below the hanging man's closing, which is somewhere around the 6,452. Our closing was somehow slightly within the body of the hanging man's body. We went slightly above it, but we closed into the body of the candle. That suggests that whilst this setup is looking quite bearish, I would say that because we didn't close below the hanging man's candle body, that suggests that we'll probably be having some form of a distribution before there is any major reversal or strong pullback. Um, on the indicators, when I look at the indicators, yes, there is a divergence in place where this is your previous high, but RSI is making a lower high here after we made a new high higher than the hanging man's high. RSI just made a lower high. MACD is already tipped below the zero line on the um, histogram bars. That also suggests that there is not momentum to the upside. Momentum is to the downside based on this weekly setup. So there isn't strength to go up. Any move up to this level, I'll consider it to the resistance overhead right here, which is 6,512. Okay, would be pretty much market makers going for this huge liquidity that sits up here. All right. And again, because the monthly closed in green, you could assume that there's liquidity above this candle, right? In other words, for those that took a short at this level, their stop losses are somehow between these levels, 6,509 to probably all the way to 6,600. Anywhere within here, you could expect a wake up in the next month, uh, potentially. Back to the weekly as I was analyzing. So I'm expecting a distribution zone here where price would pull down, move up, pull down, move up, kind of a sideways, choppy market, where I guess retailers probably would be buying the dips, and institutions will probably be taking advantage to sell. On the daily chart, we have a better picture. So when we step down to the daily, you would recognize that the overhead is where we have here. And we have a strong bearish engulfing candle on the daily, suggesting that we probably will be coming down some more, which is definitely my assessment that will come down into this distribution zone. We will definitely come back into this distribution zone. And when we do come into this distribution zone, I'm not expecting it to be like a gash down, like falling off the cliff. But I expect some push and pull within this zone to ultimately by the end of the week, I'm expecting us to hit a target here somewhere around 6,369 thereabout, where I have my price cap waiting. Um, Now, if we do break this level that I have here, 63,480, then I would expect a much deeper correction, probably to come back to this defended support zone of 62.17. But let's take it a few days or one day at a time, and let's see what happens in this distribution zone. In the distribution section here, I would expect some move up towards the liquidity zone to clear some liquidity before the final move down. Look up indicators wise to see whether the indicators support our assessment. Indicators wise, yes, we do have on the daily chart our stochastic cycle is already hit a cycle high and is turning down, just like we had here. So if you do recall, we had one here and we came back down to the 21 period moving average, found a support that correlated to a previous consolidation zone, and then we bounced back up. So we have made another cycle high here, and with this cycle high, I expect us to continue coming down. Again, on the daily, as I was saying, you could see the divergence playing itself out right from here. A bear flag, we have a bearish divergence, another bearish divergence, and this is potentially setting itself for another bearish divergence. Once the next candle completes, we'll be able to confirm this bearish divergence. So it's looking very bearish on the XPX, and I think in the coming week, XPX will do that correction to the level that we noted on the chart at 63,559 thereabout. Conclude the XPX session on looking at our 4-hour setup. So on our 4-hour setup, I expect some push up slightly into the body of this candle, but ultimately we're coming down to this target zone of 63.70. Indicators wise, if you look at indicators, officially now we are also below the 50 level on 4 hours. Um, our stochastic cycle hasn't hit the cycle low, it's at mid cycle, and I think it's trying to hold a support because, again, if you look at this, this is the 50 period moving average. It's a very significant moving average, and it's bouncing off of that. And that is why you can see the cycle indicator pointing, slightly up. But ultimately, once it consolidates, as I was saying, the distribution zone, this is ultimately going to make its way up to the low cycle before we form another high cycle into the distribution zone. And then after that, we might be coming all the way down to the price target of 63, 65. So that's my conclusion on XPX. Let's quickly step down to the NASDAQ 100. Yes, and the NASDAQ 100 also is on a monthly chart looking in a strong uptrend. Now, as again, on the monthly, we did close with a green candle. It's a weak candle, with a wick at the top, a wick at the bottom. Small body candle, more or less like on the monthly, is an indecision candle to me. It's not a strong closing for the month of August on the Nasdaq 100. You got a long wick at the bottom, a long wick at the top. Price is kind of stuck at in between these two sides, kind of a tug of war. It's neutral in my opinion on the monthly. Let's quickly look at our indicators, see what the indicators are. So again, on the monthly, we are forming a divergence on RSI gradually. Next month would confirm the divergence. So for now, it's a divergence that I'm looking at, but next month will be the confirmation of it when we get our candle print for next month. Um, Cycle wise, we are at cycle high here, cycle high here. This is potentially going to soon turn down for the next month to come. If you look at your MACD on the monthly, MACD on the monthly is also beginning to crack. It's showing weakness. So this is the momentum that we had last month, last previous month. That was the month of July. And we printed this momentum for the month of August. It's weaker than July. That suggests to me that momentum is coming out of the market on the NASDAQ 100 on the monthly. There's not much on the monthly to discuss. So I'll step down to the weekly where we can get some clearer picture of what we should be looking at in the next coming week as we invest and as we trade. So if you look at the weekly, we did have this similar to what we're having on the monthly candle, right? So this candle that we printed 3 weeks ago, very indecision candle, very weak candle, wick at the top, wick at the bottom. And then guess what happened? We had a sell off, came to find support on the 9 period moving average, bounce back, and now we have also closed below last week's closing, where price is actually below this hanging man candlestick that we printed last week. So the Nasdaq 100 is looking even more bearish than we compared to the SPX 500. Looking at this setup, I also want us to look at our indicators, as I was saying, that RSI has now confirmed a divergence on the weekly. So this was our all-time high, and we made a higher high, but RSI made a lower high. And with this lower high, with a red candle that confirmed it, so uh, our previous RSI level was here. We did this higher high with a lower RSI, and now we have confirmed with a bearish candle. It's cemented for me on the weekly that the Nasdaq 100 is coming down based on the weekly setup. Momentum on MACD is already to the downside, crossed over on the MACD lines. So everything here is kind of in line with the bearish scenario for the Nasdaq 100. Our cycle has hit a cycle high, pushed back, and now I've made a cycle lower high. Potential, this is just going to come all the way to it makes a cycle low. So step down to the daily on the Nasdaq 100, see what we are seeing on the daily. And on the daily, I'm spotting this head and shoulder pattern, and that's a pattern that I'm watching to see if it will play out. If it does play out, then of course our initial target is somewhere around this level of 22,854, and our ultimate target is coming down to about 22,000 thereabout. So it's a head and shoulder pattern, left shoulder head here and right shoulder here. Once we break this neckline right here, which is somewhere around 23 125, once we break this level, that would confirm our head and shoulder pattern, and I could be then aiming for this target. But in the meantime, I think once we break it, we'll find support right about here because of this area. This was a highly consolidated area, and I'm sure once price gets here, it's not going to break through this area with ease. So I expect us to come to this level, probably consolidate a little bit, bounce up slightly to retest the neckline of this head and shoulder, and then make our final move to about 22,000 thereabout. Indicators wise, on the daily, RSI is already now officially crossed the 50% level. And also, if you look at our stochastic cycle high is already turned down, momentum to the downside. Our MACD is already now tick down officially also on the daily chart. So officially, we have a red MACD histogram bar below the zero line. MACD signal lines and MACD lines have also crossed on the daily. So everything is kind of lined up on the daily for the Nasdaq 100 for a stronger correction. And on our trading time frame, which is my 4 hours time frame, you could clearly see this head and shoulder pattern set itself up. Left shoulder here, the head here. The resistance above this is still intact. We have made a lower high forming our right shoulder, and we coming down. Um, so this trade setup will only be invalidated if we get a candle open and close above this resistance level, which I do find very unlikely. But should that happen, then obviously there's liquidity sitting above here, and I'll expect the market makers to go for the liquidity above here before pushing further down. So that's about all that I want to share on the Nasdaq 100. And finally, let's look at gold. And when gold is been in a strong uptrend, also on the monthly, as you can see, we've been trending outside the KC channel, also on the upper side of our Bollinger Band, beautifully until we consolidated for 1, 2, 3, about 3 to 4 months. Gold was just in a sideways consolidation, choppy range. And we finally closed the month of August with such a strong green Marabuzu candle on gold. This candle is very significant for the future of price action on gold. This candle that we form here has now, after cleaning all this liquidity above here, has finally closed above the liquidity zone. We haven't closed above the all-time high yet, which is at 3,500. We currently at 3,447. So let's not forget that we still have an overhead above our Maribuzu on the monthly. Quickly, let's step down to the indicators on the monthly to see what the indicators are showing. So on the monthly, strong. See, when you get these RSI that don't come down, it just stays there. It's just because RSI can go beyond 100 and it just starts going sideways. So when it starts going sideways, it's just displaying strength. We don't have any divergence on our monthly chart at the moment. We just have a solid strength in RSI on the gold setup. You could also see whenever there's continuation or a strong uptrend, you would find your stochastic cycle just hovering around the 70-80 mark. It doesn't even come to the 50% level. It's just hovering right there. So with a strong uptrend on gold, there's no weakness in the uptrend. Um, with the weekly MACD haven't dipped below zero, you'd have expected price to have come down a bit, but price is just staying where it is, suggesting the strength of the uptrend. Now, also, we do see on this monthly chart that the momentum on the monthly is changing. So now our MACD, which was below zero, has printed a higher histogram bar than previous month, suggesting that momentum has built up even from the monthly time frame um in terms of momentum. Step down to the weekly chart, see what the weekly is presenting. And again, like you said, as I was saying, the momentum was building up gradually, even all through the consolidation zone. And now we have a positive MACD histogram bar above the zero line. We also now have a crossover of our signal line and MACD line, all above the zero line. That suggests strength. If you look at your RSI on the weekly, RSI was hovering around the 50. Now we have made it back to at least close to 70, which is the strength territory. So I expect gold to probably continue going further up after we do a little pullback because of this resistance zone that we are in. And I know this resistance zone, although has been broken, not clearly because we need a candle open and close above this level to have cemented all this consolidation. So now this consolidation is not cemented. Yes, we have gone above it. We have closed above it. We closed above this resistance level. So here we couldn't close above it. We actually closed below. Here we closed right at the resistance level. But today, looking at this past week candle, we have clearly closed above the resistance level, suggesting there is strength. What we'll need to look for is a push above this resistance level, potentially a retest of this zone, and then we can be on our way to our higher price target on gold. I'll step down to the daily chart and we conclude to the 4 hour chart on gold to conclude this session. Our time is already past 20 minutes. So you can see all the consolidation here on the daily chart on gold. It's just been going choppy sideways, choppy sideways. We came to this level one time, two, three, and this is the fourth attempt. And usually the fourth attempt, you usually will get a breakout. So I'm looking for a breakout on gold, having closed above the resistance zone as I was showing you on the weekly chart. It's showing also here on the daily. Volume wise, is pretty strong. You can see the selling volume after this huge mongoose selling volume that came in. The selling volume has been drying, whereas the buying volume is actually picking up. So there's volume confirming this move up here to this breakout zone. Looking at the indicators, you would also observe that we having a cycle high on our stochastic cycle on the daily chart. This is also suggesting to me that there will be a pullback from this high that we have. How the pullback would unfold would have to allow the charts to print, as there's still a strong momentum behind the move. It could potentially be that we pull back slightly. It could also be that this is just going to do an hovering, where it's just probably going to pull back to the 70 something level and just hover around the higher mark here. That when you have such strong momentum, you cannot completely conclude that because you have a cycle high, you're going to come down. If there's strength behind it, then your stochastic cycle is just going to stay right above here. Um, and even if it does pull back, you would realize that it would do a sideways move while stochastic cycle comes all the way to the mid level, or sometimes even come all the way to make a cycle low, but price would pretty much stay where it is. As you can see, we did a cycle high here. The example is one right here. So you had a cycle high here, and price just moved slightly to the 50 period moving average before it formed a cycle low. But again, if you look at your momentum, momentum was slightly up also, not strong, but slightly up. And then we came down to do that. So something like that could occur. So there's a caution here as we have got to this same level. The one difference that I'm observing between this level and the previous times where we pulled back and could not go further up is that there was always some divergence when we formed the cycle high. So when we formed this cycle high here, there was divergence on this candle. And the divergence, as you can see, was right above. Look at your momentum chart here. So there was a bear flag right here that pushed us there. We formed this, and then there's another bear flag, also bearish divergence that pulled us down here. So I don't see currently. I don't see any bearish divergence at the moment. Not on our MACD. I don't see any bearish divergence on our RSI. The only caution we have is that we have a cycle high, which potentially means that we could probably consolidate around this high, kind of a tug of war around this zone before we pull off from this high. But yes, gold is looking very bullish. It looks like this is going to break out. And if we do break out, the target wise is very high. Step out to the 4 hours where we shall conclude our analysis. And for me, spot gold is in an uptrend to me. This whole thing was a consolidation, and I expect this breakout to continue after some amount of consolidation right above this level. We could probably pull back into test this level again of 634.45 or 34.35 thereabout. We could even slightly come right above here. But don't forget, now this resistance is now going to turn into a support. So I expect price to move somewhere here, find support, We could probably even move all the way back to this level and bounce off, but I doubt that one. So, yeah, gold is looking very promising to move further up. Indicators wise, strength is to the upside. Cycle, as I was saying, is just hovering around, you know, the 60 to 70 mark. It's just showing strength, as well as our MACD is also above the zero line. MACD lines are also above the zero level. So there's a lot of strength in gold to go up in the next coming week. And if we should go up, what's my target price for next week? I expect us next week to first consolidate here. Potentially, we may get trouble at this previous all-time high of 34 or about 3500, but I expect us to go to this 3500 and break it. So my target wise for the coming week is this previous high of 3500, and once we break that high, I'll be watching this target here, which is when you take this as a rectangular box, this whole consolidation here that happened as a rectangular box, the target is all the way at around 3665 to about 3681. So that's my analysis on gold. I want to thank everyone for spending your time with me listening to this analysis. I wish everyone a profitable trade, and we'll continue next week to see where targets got to and where the chart will lead us. Thank you. Cheers.